Well, I welcome everyone to the Kasierer Brainstorming Pension Meeting. I appreciate this large attendance, and as we start, it's my honor to invite my Dean, Professor Moshe. Just before we start, one word, please be all on mute except for the speaker.
Hi, Dan, thank you. Can I be on mute as well? Okay, no, it was just a joke. So good afternoon, everybody. It's a pleasure being here. So a few words, many of you, if not all, know the College School of Management. Some of the people I can see with open cameras have been teaching here or are still teaching here or are connected, well connected to the school. Others may find it new to know about the school. The College School of Management is the oldest in terms of business schools in Israel, with more than 30,000 graduates. Quite a few of them are in the financial markets and in the pension, which is the topic of today. So first of all, before I forget, I think that the best thing I would do at this point is thank Dan Weiss, who orchestrated this meeting. He's the head of the Kasierer Institute here at the College School of Management. So Dan, first of all, thank you, because if I forget, I won't forgive myself. Kasierer Institute for many years is now the knowledge center in both in insurance and pension in Israel, and has a broad view on management of insurance companies, on management of pension plans, management of regulation and regulation itself, and so on and so forth. And we have already been for quite a few years the pivot of knowledge in this area. And this conference, together with Mercer, is just one evidence to what is happening and the globalization of the knowledge. Instead of taking your time in telling you about the school, which I'm very proud to tell, but this is not exactly the right place to doing it, I would like to thank, and the thanks in addition to Dan, go to the Kasierer Committee who worked around this conference and were checking the quality of the pension system in Israel. I'm afraid to name them because I'll probably forget one who will never forgive me. So all committee members, thank you. Many thanks to Miss Fiona Dunsire for the collaboration with Mercer. On a personal view, I did have my own collaboration with Mercer for many years, and Mercer is certainly a leading body in terms of pension worldwide, so we are honored to have you as our partner. It's not that easy to have more than 100 participants on Zoom for a conference, but you know, this became, I would say, the new normal in terms of academic practice. We hold most of our conferences by Zoom, so this is of no exception. But I would like to thank each one who joined us. We have 111, just broke to 112 participants in this meeting. So I want to wish you all a very fruitful meeting. I'll definitely stay for the beginning, but I'm passing the baton back to Dan, and good luck to all of us.
Thank you, Moshe. And the way we'll handle this meeting is I will present the Kasierer's Committee opinion for a few minutes. After it will be followed by a talk by Fiona Dunsire, and then we'll let the Commissioner, Dr. Moshe Bareket, to respond, after which we'll hear Ilan, Raviv, and Yoav. So let's start. The purpose of the collaboration between Mercer and the Kasierer Institute is to provide new insights, first of all, on the state of the Israeli pension system. Actually, I don't think it has ever been evaluated. Particularly, the objective is to highlight strengths on one hand, weaknesses, and also, probably most important, improvement opportunities. The methodology to do that, far from obvious, is a joint development of the Victoria State Government, Monash University in Melbourne, Australia, and Mercer. As you see, a collaboration of regulators, academia, and business. The methodology has been developed over the last decade. On the basis of this methodology, comparisons are being made between the pension system in different countries. So it's a relative comparison issue. To do that, we use an index, which is the principal result of the methodology, enabling the relative measurement of the quality of pension system in various countries. The index was first published in 2009, 11 years ago, with the pension system comparing 11 countries' pension systems. And last year, 2019, the comparison included 37 countries.
דן, תבקש מההוסט שיעשה מיוט אול. דן, תעשה מיוט אול. אני לא הוסט.
אוקיי.
שהוא אומר לו גם, שהוא לא שומעים אותו.
נו, מה יהיה?
One second.
זה כנראה לא בעיה אצל ערן.
אני שם אותה על מיוט, אבל היא נכנסת כל פעם.
תסגור אותה בבקשה. Okay, we go on. So in 2019, it included the pension system of 37 countries. Unfortunately, Israel was not included. The Kasierer Institute saw great importance in adding the Israeli pension system to the international comparison. Being a knowledge center in insurance and pension, it was part of our mission to gather broad knowledge on insurance and pensions. Moreover, we believe that Israel can learn from the experience of other countries. Accordingly, the Kasierer Institute set a committee to examine the quality of the Israeli pension system using the Mercer methodology. The committee members were Yonel Cohen, former general manager of Migdal, Yoav Gafni, till recently the commissioner deputy, Dr. Erez Levy, Professor Ofer, and myself from Tel Aviv University and the Kasierer Institute. First of all, I thank my committee members for the time and great effort in doing all this work. This is all academia, therefore the check is not in the mail. Together, we simulated the Mercer Index using the 2019 data for gathering insight on the current state of the quality of the Israeli pension system. The simulation initiated our collaboration with Mercer and allowed for delighted insights. The committee made a first report. It was the first product of the committee work. And basically, what we found is that the relative quality of the Israeli pension system is very high. A few words on the Mercer methodology. The methodology offers an index of pension system as a benchmark for relative measurement of pension system performance. This index enables comparison of the level of quality of the pension systems among different countries. I emphasize the relative comparison because Israel is benchmarked against 38 different countries. The regulator can obtain the results of a comparative examination of the pension system against pension systems of other countries, and the results of the comparison make it possible to indicate both strengths and shortcomings of our system. In other words, the results indicate specific features that contribute to the success of the pension system and also the other side. In very short, the Mercer methodology emphasizes three quality components, termed three pillars. And what does it mean to have a high quality pension system? The first component is adequacy. An adequate pension system is one that provides benefits sufficient to prevent old age poverty at a country-specific absolute level. Simply said, in an adequate system, the saver will get a reasonable pension after retirement. That's the simple meaning. The second quality criteria is sustainability. A sustainable pension system is one that is financially sound and can be maintained over a foreseeable horizon. For example, we all remember the Enron event where Enron went bankrupt and all the employees lost their pensions. The reason for that was that the pension funds were not owned by the employees. They were owned by the employer. In Israel, a number of regulations actually changed that. And one of the reasons that the Israeli system turns out to be highly sustainable is because the vast majority of the pension funds these days are owned by the employees. Integrity, last and third component of a high quality pension system. Integrity is all about trust. One way to interpret integrity is to think about the incentives. That has a lot to do with trust. In a high integrity system, the interests of all the involved parties, including the insurance companies, the distribution channel, private equity funds that manage the money, and many other participants are aligned with the savers, the employee interests. This alignment is an important issue for integrity. The Mercer methodology is based on dozens of pieces of data collected from various sources to evaluate each of these three components. I will let Ms. Dunsire to further elaborate here, and we'll jump to the bottom line. Israel has been ranked 3rd out of 39 countries after the Netherlands and Denmark for the year 2020. Opportunities for improving the quality of the pension system in Israel. What are the takeaways of these rankings and comparisons? The Kasierer Committee identified a number of opportunities to achieve ongoing improvement in the level of integrity of the Israeli pension system. First, at the regulatory level, and later on in the institutional level, to ensure the alignment of interests of all involved parties with the savers' interests. In particular, each institution entity will determine the way in which the entity can achieve a high level of integrity, including preventive measures, internal enforcement means, and a process of measuring, self-measuring the level of integrity in all the processes of managing a pension. A directorate for ethics and integrity will be established, composed of independent members. This directorate will supervise the preventive measures, the internal enforcement means, and also measuring the level of integrity at all stages within that organization. The committee has also identified 3 main areas with an improvement potential. In our opinion, ongoing investment in the following 3 areas can lead to a substantial improvement in the quality of the Israeli pension system. One is the stage of joining a pension plan and the continuing ongoing consultation for employees over the course of both the saving and the receiving of the pension. So this consultation and joining process is extremely important. The process of managing the investment in an institutional entity and the investment funds, houses in which the institutional entity invests, for example, private equities. And third one is conduct and corporate governance of the institutional entity that manages the pension money. With regard to these 3 points, in the coming months, the committee will make more detailed recommendations to the Commissioner of Capital Markets. Now, having said that, I want to personally thank Ms. Fiona Dunsire of Mercer. Her help and support are extremely important to us. Fiona is a global opinion leader on all pension issues. She's an actuary and a senior partner at Mercer. She has advised institutional investors on pensions and investment for over 30 years. She is currently responsible for Mercer retirement and investment businesses in Latin America, Middle East, Africa, and Asia, and was formerly the CEO of Mercer's UK business. Mercer, for those of us who are not familiar, is both the largest investment advisor and investment solution provider in the world, with over $15 trillion in assets under advice and $320 billion assets under management. Fiona's insights on the Israeli pension system are invaluable. I thank you, Fiona, for joining us from London, and the floor is yours.
Dan, thank you very much, and thank you everyone. It's an honor, and I'm delighted to be able to speak to you all today. I am hoping my connection behaves. It has been up until now, but it would be typical if it chose not to once I'm speaking. So I'm going to share some slides and then go through the highlights of the 2020 results of the Mercer CFA Institute Global Pension Index, and focus particularly on Israel and how it compared and opportunities for improvement. Just bear with me a moment while I bring it up. Great. So I think it's very clear that all pension systems around the world are different, and there isn't some magic formula that we would say was the only way to set up a system. There is a need to take into account the background, the context, the country-specific factors. But despite these differences, pension systems really do face a number of common challenges, and there's really valuable lessons that we can learn as we look at pensions reforms that are required around the world and what's worked and experiences elsewhere. So the Mercer CFA Institute Global Pension Index is the most comprehensive comparison of world pension systems. As Dan said, it now covers 39 countries, and that's around 2/3 of the world population. And a useful starting framework to base the assessment of the pension system around is the World Bank 5-pillar approach.
אני יכול לעשות כמה שינויים על זה?
And
ואז מה שנשאר זה שתי הקופות.
apologies, I'm conscious that if you're not on mute, if you could go on mute, please. And in the range of indicators, and I will explain them a little bit more detail as Dan has mentioned, we look at basically the positive features that across each of these pillars in trying to assess the quality of pension systems, covering both the government and private pension provision and also non-pension savings. So before I go into the details, I did want to just highlight a few caveats around the index. And it's important because actually I think there's often some comment in countries as to how their system could have been ranked at a certain level, particularly so highly, when there are individuals who feel uncomfortable or are not happy with the level of benefits they're getting from the system. And importantly, what we are doing here, it's relative, as Dan has said, and also we are assessing the system as a whole, not what any one individual will get. And secondly, it's not trying to say that this is the best practice. By carrying out the assessment of pension systems against the index, we're able to identify where there are common good features and areas for improvement, but the assessment is not saying that this is a reflection of best practice. We look at over 50 different indicators. Around half of those are objective and come from published data, particularly areas such as OECD or UN World Bank data. And around 50 are subjective and typically are prepared by the Mercer consultant in each country. And I'd like to thank the various partners, Varen and Dan, and the work that we're doing together in being able to prepare that for the future and really work to improve the quality of information around the Israeli pension system. And so as Dan said, each system is assessed against 3 factors: adequacy, what are the benefits you can expect to get from the system; sustainability, can it keep delivering; and integrity, is there trust in the system? And it's important to understand there is some tension between these factors, and there is a need for each country to find its own balance. There are some countries that rank quite high from an adequacy perspective. They're promising a high level of benefits. However, those are not going to be sustainable over time, particularly taking into account the aging population. And therefore, that undermines the strength of the system. So recognizing that tension and achieving a balance is important for each country. Now, we look at the indicators grouped against these adequacy, sustainability, and integrity factors and weight each of them to get an individual sub-index score for each area. We then calculate each country's overall score by weighting those sub-indices, 40% for the adequacy sub-index, 35% for sustainability, and 25% for integrity to get the overall country ranking. And I'll go into a little bit more detail about which factors are the most important as I discuss the Israel results. And I'm pleased to say that formally from 2020, Israel was included in the index to make it 39 systems in total. And that's a reflection of the importance of the Israeli system and Mercer's increasing presence and the work of the Institute. We have also added some other questions that we look at, and in particular, there's two questions around probably more social factors in relation to pensions. So one around how pension provision accrues for carers and during parental leave. And secondly, a question around any ESG, so environmental, social, and governance requirements in relation to the investment of the underlying assets, which is very much increasing in importance around the world. So as Dan said, the results of 2020 were very interesting, given that it was the first time that Israel had formally been added into the full index. Netherlands and Denmark retained the first two places with scores of over 80, and we gave that an A ranking. But Israel pushed Australia into third place, out of third place. So Israel entered at third place, with Australia being pushed down to 4, with an overall score of 74.7. Now that's actually just short of a B+ rating. A score of 75 or over would allow a B+ rating. So although there is still quite a big gap between Israel as the top of the next group of countries and Netherlands and Denmark at the top, so there's room for improvement, it wouldn't take much for the Israeli system to achieve quite a small amount of improvement and get into that B+. So perhaps that's a goal for next year. So I'm going to look in more detail now at the breakdown of Israel's score across each of the 3 sub-indices. So firstly, adequacy, which is looking at the level of benefits and some elements around system design. And in particular, the most important factors here are what's the level of pension that the poorest in society will get, the minimum or the base pension, and what will people get at different income levels as a net replacement ratio compared to their pre-retirement income. But finally, some areas around design issues that help to prevent leakage from the system. And these are particularly important in terms of minimum ages at which pension can be drawn and the requirement to take income from the system. So overall, Israel did score relatively well. It came 12th ranking in the Adequacy Index. However, this is the weakest area in the scores compared to sustainability and integrity. If we look at what would make the difference and areas that performed well, the base level of pension and the net replacement ratios, which come from OECD data, Israel scored pretty high. It wasn't quite maximum, so there's room for improvement. But in terms of the comparison with other countries, it was pretty good. In areas where there is scope for, and also household ownership, I should say, came out quite strongly in terms of non-pension earnings. There's some areas for improvement around system design, There's also interesting elements here around how the assets are invested, and in particular, the sorts of returns that you can get, where again, there was probably some scope for improvement in the underlying investment mix in this area. Secondly, we look at the score for sustainability. Now, this is looking at the ability to keep delivering for the system. The most important factors here are the proportion of the working population who are covered by a funded pension system, the level of pension assets as a percentage of GDP, the mix of the population from a demographic perspective, and particularly the proportion of younger versus older in the population and how that's likely to develop, and the level of mandatory contributions to the pension system. Now, of these, Israel came out very strongly overall. It's the strongest area in the ranking, came fourth overall. It got the maximum score. It's one of only 5 countries that got the maximum in terms of the level of contributions. And the level of coverage is very high as well due to the nature of the system. Demographics also work in Israel's favor, albeit I'm aware that within that there are probably subgroups of the population where that may have some other factors applied to it. The areas where it could improve most here are about increasing the level of pension assets and probably also looking in future and what's going to be the impact of economic growth is a factor here as well, but generally very strong. And finally, when we look at integrity, this is covering regulation, protection for members, communication and transparency with members. And again, those some of the things Dan picked up about that engagement with individuals. Again, Israel generally scored well, came 7th overall in this sub-index. And one of the features of the Israeli pension system, which came out very strongly, was the active, engaged and strong regulation, which I'm very pleased to say, given I understand the regulator is here today. The key area for improvement here is greater protection for members in the instance of either fraud or mismanagement of the underlying pension assets. So I set out here in summary the areas which would improve Israel's score in the index. So again, in comparison to other systems and countries around the world. So increasing the level of pension assets will actually happen generally as your system matures more as a percentage of GDP. Reducing government debt to help on that sustainability. Now, as we'll talk in a moment, that's probably an increasing problem for all countries. The introduction of greater protections for pension fund members. Importantly, and again, this would be a factor that is important in improving adequacy, is reducing the gender pensions gap. We have issues here in terms of the retirement ages for women, which is impacting their pensions, plus also some of the other factors which affect women to do with pay differences and time out of the workforce. So one of the things that would probably in itself be enough to move the system to a B+ would be addressing some of those issues around men versus women, albeit our experience in other countries is that needs to be handled very sensitively. And finally, pensions accrual, so considering support for people who are out of the workforce, for example, for caring responsibilities. And before I close, I just wanted to pick up on what's been the impact of COVID. Now, COVID itself did impact the scores for the index in 2020 because it's impact the level of economic growth. So it pulled down generally people's scores somewhat. The more important issue is how COVID might impact pension systems in the future. And in doing so, it could do so through impacting the adequacy element in terms of the level of benefits through a reduction in the level of assets that are being set aside or saved for pension benefits. In some countries, people have been able to take assets out of the system to support them through periods of unemployment and financial crisis. And we've seen significant issues of that in countries such as Australia and Peru. There will also be people who lose their employment, and there may well be long-term structural changes as a result, and therefore jobs that are lost. And also market volatility, albeit the markets have generally recovered very well. The second areas are impacting sustainability, and that's the inevitable increase in government debt, which makes the provision of long-term government funded pensions more questionable, given all of the stimulus that has been put forward. There's also an impact potentially on demographics in many countries if we have reduced migration, which would otherwise have helped to some extent to address some of the age imbalances. And finally, on the more positive side, there is generally, but not universally, been some increases in savings rates as households, the lucky ones, have had more money to save. So I'd like to close by just flagging here the issues that we see generally as being the most common areas of need for pension reform as we look at systems around the world. And they generally apply to Israel as well. Probably increasing coverage, while it would be a good thing, Israel already ranks high in that respect, particularly compared to other countries. But the other factors in terms of increasing pension ages, labour force participation, reducing leakages from the systems, encouraging and finding other routes to non-pension savings, the issues you mentioned, Dan, around governance and transparency. And I would flag again, importantly, the issues in addressing the gender pensions gap that we see in Israel and other places around the world. So with that, I'll stop my formal presentation. I'm very interested in hearing your commentary later. I'm very happy to take questions on either Israel or other elements of the system as part of that. So thanks very much. And Dan, I'll stop sharing. Great.
Thank you, Fiona. Can you hear me? Yeah, thank you, Fiona. Thank you very much. And now I want to invite the commissioner. I think he is probably literally happy to join us today. So Moshe, do you want to share slides?
Yes, absolutely. So I'll share my screen just in a minute. For some reason I cannot do that. Let me see. You are able to see my presentation yet, right?
We do not yet see it.
Okay. I think I got it.
Oh, now we do.
Now you can see. Okay, very good.
Now we do.
So great. So thank you very much, Dan and dear Fiona and our respectful participants. Thank you for allowing me to present here in this joint conference, Mercer and Kasierer. I am very happy, of course, that Israel has been included in the Mercer Pension Index and ranking, and I obviously am happy about the high ranking that the Israel pension system has received. It is true that we have a pretty advanced pension system. All in all, looking at the funds in the system, so talking about the second pillar, savings, of course. So the pension funds altogether are 903 billion new Israeli shekels. provident funds. We will have a breakdown for the old pension funds, the defined benefits, and the new pension funds, the defined contribution, in the next slide. So we have provident funds, almost 600 billion shekels, and life insurance, almost 400 billion shekels. All in all, close to 1.9 billion shekels, I think near 2 trillion shekels already, more than half $500 billion. So defined benefits, that's the old scheme, accounts for about a half of the current funds, the total pension funds, but the defined contribution pension plans are growing rapidly because of the compulsory act, and within years they are going to be obviously the dominating chunk of the pension system. In terms of asset share and contributions, market share in contribution, we see that we have, first of all, a pretty concentrated system, but the system being concentrated does not say that it is not competitive. The other way around, we see that, for example, you look at Altshuler, which is only 3.4% in asset share, already has 16%, above 16% in its share in contribution, total contributions. And that's a new participant in the pension arena. I think it's about 3-4 years that it has gotten into the pension arena, and already accounts for a huge chunk, the leading chunk, almost the leading chunk in contributions. We have Menorah, Harel, Makefet. Again, Harel has been a smaller pension fund and growth, and with rapid growth have bypassed Makefet, which is a more an old and more senior fund with a tenure that is much higher than RL, but still we see that due to some steps that were taken by the authority, driving competition higher, this can also be seen by the fees, reduced fees in the market. If 2015 we've seen fees average of 3.17%, it has come down to 2.12%. I'm talking about fees out of contribution. And fees out of assets, we've seen a reduction from 0.28% to 0.21%. Before 2015, we've seen even higher numbers. So the reforms have reduced the fees for savers quite significantly. If we look at an international comparison, we see that the Israeli pension market is one of the cheapest worldwide. And this is due to participants and government awareness of the importance of the pension system and the protection that is given to savers in the Israeli market. Whether this is sufficient and whether we should basically sit still and not look for more reforms is a big question. And my answer to that is that there are still much more improvements to be done. I believe that Mercer Index have taken into account savings, for example, study funds and so on, and including them in the long-term savings of the Israeli savers. However, when we are looking at the younger generations, how much they are saving for pension and what will be the substitution factor from salary to pension when they retire, the future is not so shiny for them. And with low interest rates and if inflation would rise, the situation would be more severe. And we think that we need to encourage more and more savings into pension and long-term saving, other kinds of long-term savings. And we think that we should still encourage competition in the market. So there are a few reforms that we are planning ahead. One is removing the operational barrier. Right now, there are participants in the total long-term savings market that have a good track record in managing other people's money. And they have the ability, however, they do not have the operational skills to manage pension. What we would like to do is either create a central operational system for running pensions, and this is based on the current pension clearing house, or allow for access into currently existing pension platforms, so that new competitors can easily access operational systems to run their pension schemes. So this is one of the reforms that I think, if we are successful, because I see here in the audience Yonel and others. Yonel is part of the committee, of course, that have talked about this idea for many years. It's not an original idea by any means, but we think that we will try and strive to make it reality in the near future. Other issues relates to benefits, governmental benefits to the pension system. So we have the designated bonds and we have tax incentives, but the problem with tax incentives is that they don't go down to low-income savers. And the low-income savers, actually, those who have very low income, do not really benefit from tax incentives. Actually, when they make contribution to pension, actually their ability to strive on their net income is impaired. This is why we see sometimes that they are deterred from contributing to pension plans. We believe that we should give them more incentives in order to make the compulsory pension plan of the government more comprehensive, as it meant to be. And those low-income citizens are not enjoying the tax incentives as was the intention. So we believe if we give negative tax incentives for pensions, not just for current salaries, this may encourage those citizens to contribute more steadily to their pension plans, and will make their savings higher and appropriate to match retirement to match the retirement incentives of other higher paid citizens. Another issue is that the incentives currently are annual incentives. So we have tax incentives that are computed annually. And we have a young generation that is has a different work habits, and if in the past a person was basically bound to one employer for most of his lives, then today young employees are moving from one employer to another. Sometimes they go and seek their own ventures, and they might lose a lot of the tax incentives that the government has meant to give them. This is why we think a lifelong benefit scheme may be more suitable for modern employment environment. And we think that by convincing the government to basically give each person some kind of a benefits bank for across his life, this is something that can exploit better the tax incentives along the life of different work patterns, and make it more affordable for the young generation to save for retirement. Other reforms that we are looking at is changing the fee structure. We've seen that the management fees are relatively low in Israel, but still there are issues that we need to address. One of them is that solid investments, and typically we are following in Israel, in a way we're following the Chilean model, where elder persons are shifted towards more solid investments, low risk investments, and those persons are still paying a flat fee regardless of the assets that they are invested in. Obviously, inputs for managing high-risk alternative assets and so on are not the same as inputs for investing in government bonds and so on. This makes the system unequal for different participants, and in a way sub-economical. So we think that we can improve that by initiating differential fee structure based on asset class, and by that making more economic reasons for fees that are paid for solid investment versus high risk investment. Another improvement that we're seeking is to make an overcome of the performance fee structures that have been in Israel in the past, but I think we can have a new performance fee structure that is even better for savers than the ones that have been in the past. this aligns better the incentives of the fund managers and the savers. It allows for better net returns. By one way is that if we are investing in high yield assets, then if the incentives to invest in high yield assets are improved by a variable performance fee. And if we are investing in low risk products, then basically we are going to pay lower fees. And if there are losses, then the fund manager is participating in the losses as well by having a high watermark or some other kind of mechanism that would provide for participation in gains only if the accrued gain is positive for the saver. So again, we are seeking for schemes that would improve overall the net returns that savers see in our market. Last is something that was referred to in the Mercer report, and this is risk management of pension funds. What we're looking at recently is, and I think I spoke about that previously, we look at the Solvency II risk management paradigm, and we would like to adapt that for pension funds. Obviously, pension funds do not, there's no need and no logic to put a capital requirement over there. The capital requirement is not needed. However, we can rely on Solvency II risk management paradigm rather than the capital requirement to assess the risk management of the fund better and to channel better risk performance. Because today, if you do not have a capital charge, and you do not account differently for the different level of risk in the market, for example, if there is a funded scheme, for example, an insurance company that is paying for holding capital, and then there's a pension fund that is coming into the same play without capital requirements, then they are not equal in the terms they perceive the risk, which may drive asset prices higher and make underscoring of risk. This is something that we would like to address, and this is something that, as I said, currently we're looking at is in line with the recommendations in the report about better risk management for pension funds. Those are some of the steps that we are making currently, and all in all, we have other steps. For example, just recently we are trying to reduce pension fees for retirees, and other steps that we are taking together with the Ministry of Finance and with our other colleagues in the Ministry of Finance in order to improve the pension system. So we are very happy that we were ranked number 3, and we thank Mercer for their collaboration with the Kasierer institution in the Israeli economy, and we appreciate that greatly, but we still think that there are much more improvements to come and to foresee. Thank you very much.
Thank you, Moshe. Thank you very much. Our first respondent is Ilan Raviv, Meitav Dash.
Hello, good afternoon, everybody. Thank you very much for the invitation. And I want to say, firstly, that I greatly enjoyed reading the report. Most of my comments are on the results of the Israeli jury. So the report of the committee which worked with the Kasierer Institute, specifically with a deep dive into the Israeli market. I'll try to keep it brief. So I chose just highlights or one or 2 points from each of the 3 categories, which as a market participant, as a manager of a pension plan company, I think are relevant to us and to the market. So if we're talking about adequacy and we're talking about coverage, you mentioned the voluntary savings, or does the pillar above the compulsory pension savings. And I think we can do some work on increasing the voluntary savings of the Israeli employees, the Israeli public, the Israeli employees. And yes, tax advantages have their problem, or tax benefits have their problem. But I think that on the voluntary savings, we're talking about capital gains tax. Moshe, I think it does trickle down to the lower, to anybody actually who owns a voluntary savings scheme. I understand, and I'm looking forward to very soon increasing the tax advantages on voluntary savings. I think it can be a great addition to the adequacy and the substitution rate of the savings here in Israel. You mentioned that the ratio of pension savings in Israel is invested in assets with growth potentials like stocks is relatively high. True. I don't think it's that high in international standards, by the way, but it's definitely high relatively in historic standards to where we're coming from. We're roughly about 40 to 45% in equities. It's mainly driven because of lack of alternative or the very low appeal of the fixed income markets. So yes, I think it's a benefit, an advantage. I think we should be there, but I'm also wary that it is a risk factor. Last point on adequacy was mentioned by our commissioner just a moment ago, was the point of the fees, the management fees. I'm very proud that we've taken part. The newer pension plans, the newer pension companies that were on the right side of the graph, I think that Dan that Moshe presented before, have taken part in the reduction of the fees. It's an ongoing process. I think we've done most of the work there, as we can see by international comparisons. The fees here are quite low. And the one area which remains to be taken care of is the fees, as you mentioned, on the pensioners, the actual people who receive the allowances, who are still paying fees which can be reduced. I move to sustainability. Most of the work on this front is done by our good demographics. They do cheat a little bit, Fiona, because as you mentioned, they're not evenly distributed. The demographics, the birth rates, definitely. I think we do need to take care of the retirement age and the gender gap in the retirement age. So as you mentioned, very sensitive issue. I've seen solutions in other countries, including the UK, of a very gradual increase in the retirement age for women, and I think it's something that needs to be addressed. Integrity of the system. Well, I'd like to think that it has a very high rate of integrity, but you can never be too much on that front. So a few points. One is on the transparency issue. And this is probably not going to be too popular, but I think at times we tend for over transparency, and transparency is positive, it's good, but we do give our savers a hell of a lot of information, and sometimes it drives them to overactivity. Now, I have no problem with savers who know what they're doing or who have good advisors and move all the way to IRAs, individual retirement accounts, and manage their money, or have advisors which help them manage their own money. That's fine. But I think a lot of the general public who are inundated with information from ourselves may sometimes overtrade or over move their pensions. In Israel, you can move your pension between the different investment mixes. And I think we should be a bit wary of that. Luckily, the 2020 market downturn was short, so we didn't suffer, or our savers didn't suffer too much for moving out of risk assets and missing out on the rally afterwards. But we've seen it happen many times in the past, and it's something that needs both financial education, but is also driven by them receiving a lot of information from us. The risks of the system, we know the traditional risks, and I think we address them quite well. We can always do more, but I think overall we address them quite well, and the regulation addresses them quite well. I think we need, especially these days, to take care of the cyber risk. It's a new risk for all of us, and it's materializing at the present. So that's something that needs to be addressed. And if you ask me, I'm more worried about my cyber risk than I am about my market risk or my credit risk, my liquidity risk at the moment. Last point, which doesn't really come out of the report too much and is specific to Israel, is the issue of the distribution channels, or I would say the point of contact with our end clients. We have three factors there. We have the employers themselves, who of course talk to their employees about these issues. We have the banks, consultants, advisors, who have the ability and are not really in the picture yet. And we have the the insurance agents. I think there are a lot of issues regarding these points of contact that should and can be improved. I know that our regulator is giving it a lot of thought, and I'd like to see some action on some of these points. They're very critical, especially as the majority of our savings, our long-term savings, is both the onboarding process and the ongoing consultation of the clients after they're onboarded, after they're members of their pension scheme or their long-term savings schemes. Those are very important and are mainly done not by the actual pension companies, but by the distribution channels. So those are the points that I'd like to address, Dan. Thank you very much.
Thank you, Ilan. Thank you very much. Our next respondent will be Yoav, or anyone who wants to ask question, either one of the presenters, please contact me with using the chat. Yoav, the floor is yours.
Good evening, everybody. I always knew we have a good pension system. It's not a surprise for me. But it's still nice to see it on an academic, to get an academic proof of that. So I was very happy to read the report, and thanks for the opportunity to participate. I have a few comments. The first one is I want to say we have a very competitive pension system, in my point of view. In many aspects, we have the number of players, their distribution, the fact that the big players are more or less the same size, fees, and also the large number of intermediates. And yet we have to make sure it stays competitive. It's an ongoing effort, and most of it is on Moshe and his people to make sure that it stays like that. So that's just a comment. Second comment is regarding integrity of the system. And I'm referring to political discipline. We've gone a long way from a system that was mainly controlled and managed by the government. Most of the investments were government designated bonds, and now most of the money is out in the free market. We moved from a market that everybody charges the same fees. Before 2003, everybody paid the same fee in the pension arena, and now it's a competitive market. And there's a challenge in keeping it and keep improving the market. Lost. Regarding that, I want to refer to the retirement age of women in Israel. As people before me talked about it, it's a fiasco. There's a fiasco of 8 years delaying a decision, a government decision, 17 years old, raising a women's retirement age. It was gradual, was supposed to be ended two or 3 years ago already. And we're still hanging around this issue. So that's one issue. Another issue is the tendency to see the pensions savings as a source of liquidity in hard times. Only recently, allowing self-employed using their long-term savings for liquidity uses. So that's another point I wanted to make. Another thing is making sure the cake grows. It also has to do with self-employed. Self-employed, supposedly, they have a mandatory savings, and we have to make sure that they do save. So that's another point to make. And 2 more points is regarding tax incentives. I want to resonance a concept that was raised many years ago, I think by the IMF. They asked us why do we need tax incentives if the saving worry, and this is something to keep in mind. And the last point I want to make is regarding the third pillar, or the first pillar, I'm sorry, the Social Security in Israel. What Fiona referred to as pillar 0. And it's very low in Israel. And I think this is one very effective way for the Israeli government to help secure the economic state of older people. That's my remarks. לא שומעים אותך, דן, אתה במיוט.
Okay, thank you, Yoav. Thank you very much. First question, רועי ממרן.
כן, שלום.
שומעים
אותי?
Yeah.
Okay, so Roy Mimran, I'm from the Center of Pension and Financial Literacy in Ben-Gurion University, and also the chairman of an NGO, the Israeli Forum for Pension Saving. My question is for the panel members, what is your opinion about ESG investments? That means either moving the entire investment portfolio of your pension funds and products to ESG, or via specific investment channels per choice, either ESG or fossil-free to save the climate. Thank you.
I'll take the question, Dan.
Yeah.
I think everybody who manages investments today will tell you they are very pro ESG, but let's be a bit more specific. In our general investments, we've added ESG, and it will increase in importance in the future. I'm sure it will continue to increase as a parameter for screening of our investments. But if we're talking about the end client who wants to know that his pension money is managed according to ESG principles or according to any specific principles, I think the place to do that, or the way to do that, is via the creation of specific instruments or sub-plans or sub-channels or within the pension world or within the provident funds or wherever it may be. Very similar to what we have in terms of investments which abide by the halakha rules, the Jewish halakha rules, or the Islamic rules. We have such schemes. Most of the companies have such schemes, and if somebody wants his money managed in a separate way or in a very specific way, I think we should create that for them. I do receive quite a lot of clients' letters, mails, telephone calls telling me, why did you invest in this company? Why did you not invest in that company? Because of ESG considerations. And we try to explain that it is a factor, but it's not the only factor in overall investment management. But I think it should be considered setting up a specific plan for them. That's my reply. Maybe the committee, Moshe, do you want to say something about the ESG? Because I know it's something that's very close to you as well.
Yes, I can talk about this a little bit. The fiduciary duty of pension managers is basically to gain appropriate returns and scaled by the different risks. And that's the main objective of fund managers. Now, we are underway of mandating fund managers to take into considerations ESG consideration within their investment consideration, to take into account ESG consideration as much as they, or as long as they refer to impact on returns or possible risks. And this is the framework that we look at, and we believe that the financial system should not be a rating system for different values, moral values, but rather for returns and risks. And this is how we view the ESG getting into play for financial managers. We would not want fund managers to build in the investment choices their own moral preferences. And I think the savers would also think the same as we perceive this. Obviously, as Ilan suggested, if there are funds or different instruments that are designed and well clarified for achieving certain objectives, and whoever is putting money into that vehicle knows that there are certain choices that are made that may impair returns or may involve more risks, but this is in order to achieve other objectives. Obviously, there is room for such vehicles, but this is not how we are basically looking at the general pension savings system.
Well, thank you, Moshe. Let me provide the, I would say, academia perspective on the ESG. I must say that these days, I would say kind of two ways to look at it. One is led by Professor George Serafine from Harvard, who basically says and shows and documents that ESG investments have incremental returns. And in that sense, they are in the way that Moshe and Ilan think about this. while there's a different stream of studies led by Baruch Lev from NYU, who's basically said that ESG does not have any significant incremental returns and therefore doesn't add any value in terms of returns, in stock returns. Of course, it has lots of other values. And I think all I can say about this is that you guys should stay tuned. There's more to come because there's going to be much more evidence, empirical evidence in the academia, but as of now, the dispute is still going on. Our next question, Ofer Brandt. Ofer?
Yes, thank you very much, Dan, and thank you, Fiona, for the very interesting introduction and the study, which was very encouraging and made us proud to be one of the leading pension countries leading in the benefit. I'd like to have your opinion on the design of the pension schemes around the globe, as you probably know better what is available. There is a tendency of some countries, and mainly if we look at the UK and I think also Australia, where there is a tendency to provide more flexibility at retirement for the individual and how he's going to withdraw his money. So as opposed to Israel, for example, and what used to be in the UK, where there was a compulsory requirement for individual to withdraw money as a pension income throughout his lifetime. Few years back in the UK and also Australia, and I suspect other countries, there was a tendency to reverse this compulsory requirement and allow the individual to have a higher control of his own money, and therefore allow them to withdraw larger sums, and therefore, if you like, in my opinion, jeopardize their ability to have their own income at a reasonable manner to sustain a reasonable lifestyle, and not do, if you like, in inverted commas, foolish things with the money. So I was wondering, what is your opinion and how you allow for that in this index, and if at all?
Thank you. It's a great question. It is one of the factors. It's one of the very important factors in looking at the design issues in adequacy. So the ability to get your money early or is not as an income stream is penalized in the index, and systems that require a certain proportion and a relatively high proportion to be taken as an income, or also provide tax or other advantages to encourage people to do that, get higher scorings. I think the challenge that I see, probably more from a practical perspective and from my work with employers and their workforces, is the balance between engagement and flexibility, where encouraging, particularly where you're trying to encourage further voluntary savings as opposed to mandatory, where encouraging people to save if they know they can't get that money for 40 years or 35 years can be hard, but particularly for younger people. It must be said that the UK system is penalised in the index because of the pensions flexibility that was introduced. And there was a lot of headlines at the time about people buying Lamborghinis, I think it was. To some extent, they would be lucky if they had enough money when you look at the average pot in that respect. So I think there's an element of balance of how you get that engagement with voluntary savings together with the flexibility. But certainly our view is that having incentives to take income rather than otherwise is positive. The other thing to look at is there are some countries that allow limited flexibilities in certain circumstances and for particular age groups. So for example, in New Zealand, to be able to use some of your savings towards your first house purchase. In Singapore, again, there's some limited ways that you can access some of your assets. So building those elements in would be seen as better than allowing the sort of significant flexibility that you see probably in Australia, where the push should really be elsewhere. And also the issue that other commentators have talked about, where finding other means of safety nets rather than people being able to access their pensions in times of financial crisis and individual crisis is negative as well.
Thank you.
Well, thank you, Fiona. Last question, Emmanuel Berzak.
Hi, Fiona. As you know, different types of pension arrangements around the world have a different source of, maybe we could call it a sponsor, or someone who's actually bearing the risk. And in most places in the world, as far as I know, it's basically split between either employers or insurance companies. And of course, you have the government for public pensions. And sometimes you have a safety net from, like in the UK with the Pension Protection Fund. In Israel, we have something which I think is quite unique, where the risk is borne entirely by the members, by the employees. And, you know, some of the risks are maybe could be hedged or reinsured, but if you really think about it, the biggest risk for a pension fund should really be the longevity risk. And I find that this is something that gets very little and maybe zero attention from let's say the public, maybe even not. Let's say it's not the focus, and it's very easy to ignore it when at the moment the vast majority of the members are active employees, and so you know nobody's seen any events with the new pension funds where this could cause a crisis. But looking into the future, it's potentially a big risk. So I'm wondering if this got any attention in your comparison, because I didn't see anything about this in the report, is you know, who's actually bearing the risk and the implications that might have on the integrity and sustainability long term of the pension.
And you're right in that it's not explicitly covered, in that the report doesn't take a view on one system being better than another, but is looking at how large the assets are that are funded and set aside, regardless if that's from, for example, defined benefit or from defined contribution. It does take into account, though, expected life expectancy, and I guess in the Israeli system for the new pensions, the risk is with the individual, and the risk is that they effectively, well, I guess it depends how it's annuitized at the retirement. I take some of that back. So it's taken into account in that issue around how much gets taken as income versus being able to be withdrawn and therefore drawn down over time. And secondly, in terms of the demographic features of the country. So it's implicit in all of those. But you are right that there are different features of systems which protect individuals somewhat differently, albeit that the move generally is from the defined benefit ones, where the risk would be with either the employer or the state who is delivering that, to a funded defined contribution, where it sits more with the individual depending on what happens at the retirement.
Yeah, but you know, there's a big difference between defined contribution in other countries where it covers that's only talking about the risk during the savings period. But then when they annuitize, they normally buy an annuity where somebody else bears the risk. Whereas in Israel, the risk remains with the group, the collective group of members, even during the annuity list.
One perhaps we'll reflect on and perhaps can discuss further as we look into this for next year.
Well, I thank Fiona Dunsire. I thank the Kasierer committee members, Yonel, Cohen, Yoav, Gafni, Erez, Levy, and Ofer. I thank all the participants, and I do hope that our pension system in Israel will keep on improving and reach even a higher level in the next year. So thank you, everybody. I thank you for joining us, and we'll see you again soon. Bye-bye. Have a good night.